Okay, everyone should be able to hear me. Welcome to the Hurley Investments Financial Services Commentary for Tuesday, April 4th, 2018. I've got a couple interesting things I'd like to talk about today, and I'm going to start off first with you guys making a decision. Am I going to talk about my concern, or I'm going to talk about Mr. Inexperienced even though he thinks he is? Which one am I going to go through today? Which one is going to be the what I need to go over with you guys? There we go. Okay. So I'm going to take this and I'm going to cut that out. Mixture inexperienced, even though he thinks he is. This was an interesting conversation that I had with an individual today. Not today, excuse me, last week. So last week, the comment was made for me, and it was, Kevin, don't you think it was a mistake to take off Baidu? I'm pretty sure they were September of 18, $310 short calls. Sold to open for a $11 and $11.95 credit, and bought to close for $2, netting a $9 and roughly a $9.95 net profit. So if you are able to net a $9.95 profit, would you be considering that a mistake? Or captured, let's take, let's see here. Let's take $9.95 divided by $11.95. Captured an 83 point, oops, my bad, sorry. Crying out loud. Get that out of here. An 83.2% of the total credit. So what do you think? Is that a mistake? Vernon, David, Amy, Lance, Doug, David, two Davids there, Jeff. What do you think? Is that a mistake? Come on, guys, don't be shy. You just captured $9.95 of an 83.2%. Thank you, Vernon and Lance. Both of you said no with capital letters and exclamation points behind it. Of course not, right? You just captured an 83.2%. And the reason why was because Baidu jumped up the next day. You know, it wasn't a spectacular return, or a spectacular jump up, but Baidu jumped up. So let me just make this point. Anytime you close an option or option spread for a profit / break even, you are in a great trade, and don't beat yourself up for not catching tops of tops, bottoms of bottoms, or every possible cent in your trade. It's simple. It's a matter of inexperience. It's a matter of tops of tops, bottoms of bottoms. There it is. Sorry, I saw it. All right, so don't beat yourself up. You're setting exits at a 20% return. Sometimes it might be a straddle that's a 10% return. Sometimes it might be getting out at 5% in a day. You're not going to beat yourself up over not catching all of the money at the top or all the money at the bottom. It just doesn't work that way. And because it doesn't work that way, you're okay. You're in good shape if you don't capture everything. In all honesty, as you can tell, I was pissed off. I was ticked off at the guy. Kevin, don't you think it was a mistake to take off Baidu September 310 short calls and missing $2 of the potential credit? And I kind of chuckled because no, it's not a mistake. Man, in all honesty, to capture $46 of a $52 movement down, 52 of a $50 movement down, I mean, there are some great returns in there. And it ticked me off. So a little bit of what I want to talk about today is inexperience. Anytime you take an option, straight option, a option spread off for a profit, you are in a great trade. You don't go broke by taking profits. You go broke by being stupid and trying to get every penny, so when it bounces higher, you don't capture it all. Do I think Baidu is going to bounce back up in the near future? I do. It probably won't get up to the 310, but if it bounces up a little bit, I can sell it again for more credit. So where I'm going at with this, and here I am trying just to not get too frustrated, it's okay not to capture every penny. It's okay to capture bits and pieces of the wave. That is where an experienced trader is looking for, to try to always make money in everything that they get into. So the second, my concern, right? What is my concern? Out of curiosity, and some of you I see from this morning, what is my concern? What am I worried about if I'm looking out there at the market? Take a guess. What would my concern be? Baidu not bouncing up. Thank you, David. That is not correct. That's something I'd expect out of your brother Lance to say. No? What do you think my concern is? And if you don't know, go ahead and type a couple question marks in. Vernon says volatility, and Jeff, pretty interesting. The market dropping out. I'm assuming that means the market dropping down even farther. Those are both good concerns. Another David, there are two Davids here tonight, typed in a couple question marks. This actually goes back to this morning. So a couple of you might have seen this earlier. My biggest concern sits with the S&P 500 right now. And my concern is the fact that one, two, three, 4, 5, 6, 7 days. 7 days we've tested the 200-day simple moving average. So if I was to quantify it, right, I'm going to go up here. Let me erase those little yellow marks. It kind of bugs me. For 7 days, we've tested the 200-day simple moving average, which means, my opinion only, right? Which means we are close to using up all the buy orders that were stacked up at the 200-day simple moving average. And now we will not have the big runs back up. Our movement back up from here will most likely be slow and sluggish. I don't think we're going to move nearly as quickly up through here, and especially up through here for the next 2 weeks. We will probably kind of meander, little up, little sideways. In fact, we could really look a lot like this right here. Kind of moving up, but we're not going to move up with the intensity. We're not going to move up from the 200-day for this big rebound higher, even though I would expect we will have significant good news, more buybacks, increased dividends. We should hear some really good news on earnings moving forward. It's just my concern it won't be significant because the big money has been battling the 200-day simple moving average. It's done everything it could in its power to keep us from going below that and falling into what really could be that bear market that we're looking for. Not only a correction of 10%, but some bear market territory that we could see, into that 20% plus areas. We've seen some stocks already there. We've seen a lot of stocks in correction territory, obviously if an index is down 10%, but it could be much worse. It really could be significantly worse than it is right now. So, what can I tell you? I guess it's disappointing we didn't see more of a V shape. I would have really expected to see something like this, but that did not happen. In fact, futures already are down pretty good. We might really be testing that 200-day once again tomorrow. What are your thoughts? Am I crazy? Is my concern overblown? Are you thinking, and again, Lance, leave it to you. You and David, you guys are killing me. Kevin, stop the worry. The buy the dippers will show up. The buy the dippers aren't showing up right now, so you never know. Maud made a very interesting comment. Lots of darkness before the dawn. That could be true. And Amy, thank you very much. Amy says that's an interesting insight, and it gives me pause for concern. Vernon, pretty smart, I think. David and Lance, I like some other people better than you, apparently. I'm saying that jokingly. It concerns me. It concerns me to see how long we fought that 200-day, and it's truly only on the S&P. Obviously, we're bearish right here. If I moved up and took a look, we haven't had that same fight on the Dow. It just hasn't been that way. It's touched it once, but it's fighting at 23,750. It's not fighting at the 200-day. And the NASDAQ has had a couple days, but look at the bounces off, and it hasn't bounced right on the 200-day. So what worries me is that S&P, the blue chips. I would not think, how did I say this? The runs, the bullish run up have had leadership in financials, tech, industrials who are going to do good, you know, the Boeings. You could even say energy. I would say energy, well, as a sector you have to give it, even though you haven't seen the run necessarily in the oil stocks as you thought you'd see. But I'm not sure if the next leg up can be anything other than technology if it comes to taxation, financials if it comes to deregulation, higher interest rates, industrials and energy also, taxation can help them, but you just don't know. The real answer is you just don't know. So this is where for all intents and purposes, I guess you'd say the rubber's going to meet the road. This is where the rubber meets the road. This is where we're going to have a we're going to see if we're going to go higher or not. The bad news is if we do not maintain our the 200-day, even with all this good news that's expected out of the earnings, technicals could take over, in which case it would not be a smart run, or you probably wouldn't see a pretty good run up from this point on. So it gives me concern. Any comments anyone else would like to make about the 200-day and what I see? I mean, you've made a couple comments here, but I would hate to lose some of our potential next leg up to technicals, to program trading, to the reality is, let me just put it this way. I would hate to see the 200-day simple moving average turn into resistance. That could truly be a killer for the stock market. Now, yes, I like collar trading. I would love to see, absolutely love to see a big drop down, a huge drop down. Baidu's already going to pick up some more shares with their last drop. We made a drop earlier that did pretty well. So here we are again. Finally going to be some of my people with 500 shares. We can add another 100 shares of Baidu with some profits from some long puts as I roll those on down. It's trying though. Sometimes people, when they don't see the growth, or they don't see big movements up, or they don't see that you make up dollar for dollar on the way down, it obviously is kind of tough for some people, in which case we got Mr. Inexperienced, as I talked about earlier. So with that said, tell me what's happening this week and why. What's happening this week and why? ISM index 59.3 versus a 60.0. Non-farm payrolls on Friday. That is definitely average work week. In fact, we might not see any movement higher in our week, just kind of meandering until we get those numbers in. I'll be honest with you, I think they are going to be pretty good, only because the GDP was so much better than expected. 0.1 versus an estimated 0.5. Autos were a little down. Auto came in at 4.10 million versus an estimated 4.13. But if you like Ford, trucks came in at 9.64 million versus an estimated 9.08 million. Go Ford. I only say that because we have like, what, 100,000 shares of the stupid stock hanging around. So non-farm payroll on, if I can go ahead and make that comment. Non-farm payroll. Not what I'm looking for. Average work week reports on Friday. That could, what could they do? They could squash the fears in the market, right? I do think our market's going to go higher, even though we have some bearish indexes. It's technical, bouncing off of the 200-day. I still do think April will end negative. We ended March negative. I go back and take a quick peek at the S&P. One month return is down 2.85. So I was pretty close on my March thing to be down 3. I'm pretty sure we were right at that, if not a little bit more. Year to date, we're down 2.21%. Protection is the key. Earnings, not a whole lot of earnings. Play, CarMax, Lennar, Monsanto, nothing really to speak of coming up this way. We do have economic reports that are pretty non-existent. There was nothing that really stood out for me on the international side. Let's just make sure I haven't missed anything. Just take a quick peek here. Industrial production in Germany, factory orders in Germany. Europe really hasn't meant anything. PMI composites, manufacturing composites, services index, China's general services, Japan's PMI manufacturing composite. Nothing really stands out that I saw that I would pay attention to any economic reports this week that would give me any pause or concern. How am I looking to trade? I am protecting early, and it's not what I thought it would be. Do not want Arial. I would like New Times Roman. I would like it at 14, and I'd like it like that. Protecting early, and will roll down long puts to be at the money for earnings, taking long put profits. Pretty simple. I'll get your questions here. I really didn't find a whole lot other than some good news for some stocks that I trade in. Alibaba and Fordhamville card vending machine. Just like that Ford is working together with Alibaba in China. Bitcoin falls 7%. I think it's obviously pretty important to see cryptocurrencies eat it, and they're going to keep eating it for probably most of the year. Facebook at a classic sign that it's oversold. Yes, I would like to find a 152 range where I could finally add some long calls. I have missed it on the last drop. And earnings season can stop the bleeding on the markets. I found this to be a pretty interesting article that definitely is worth reading on the benefits of this next quarter earnings. Goldman Sachs computer model warns bear market is near, but the firm analysts don't believe it. So here they've got a supermodel bear market warning, yet they've already poked holes in the way that the programming is done. I had to laugh at that. Way to go, Goldman Sachs, to have a supercomputer, analytical data, but say, hey, because taxes and so forth, the numbers are skewed. In fact, it says, mainly due to low unemployment rate and strong economic growth momentum, skewing the results rather than rising rates or strong core inflation. So the indicators, that they're supposed to be using, the employees are also saying it's not worth it. It's not correct. What questions do you guys have for me tonight? Any questions I can answer for you that'll be helpful? Is it ridiculous to consider that the big money has found that they can run the market up and down and make a lot of money in doing this in this market climate? So where are the buy the dippers, right? Running it back and forth. In January, there was a huge rush of a big rush of money into funds. So the main question is, Vernon, and that's a really good question. The main question is, though, is this a rush into ETFs where big money then sells out as retail comes in? Or is this just a standard correction? I mean, we went 8 years without a correction. Is it manipulation, right? That's the main question. Is this manipulation? I don't have an answer for you. I don't have an answer that I could pinpoint and say, Vernon, look at this, and this tells me the answer. I do think the market is exhausted. With that said, I see no reason why the selling may go away people could really regret that decision, because earnings should be outrageous. Again, financials look ridiculously good. Again, you have to be a stock picker. I think Goldman Sachs, JP Morgan have moved as far as they can. They're going to go back to retest old highs. Wells Fargo probably won't do really good. But Citi, Morgan Stanley, Zions Bank, a regional out here, Bank of America have a lot of room to run. A lot of room to run. They could really see some great movement. But the key question is, all the experts told us that 2018 would be different. And in all honesty, I'll tell you, I thought it could be a lot like 2017. But as volatility kicks up, it is different. Welcome to a different market where we don't have the buy every dip, where we don't have the complacency that we've had in the last year. Last year was ridiculously complacent. I was talking myself into finding market crashes, but in all reality, it was just a complacent, boring year. So with that said, Is it ridiculous to consider that big money has found out that they can run the market up and down and make a lot of money in doing so? We don't know yet. We don't know yet because we haven't seen big money returns. I really, in all honesty, wouldn't surprise me if we see Paulson take another big hit in his funds. He's done horrible. Watch Warren Buffett do extremely well, although we have had a 10% hit on the way down. Maybe it'll show up in his numbers as well. You don't know until you know, and that's usually after the fact when you see the results and you have things that are pointing to it. So, and I'll answer a really long-winded answer for your question. I don't know. It could be, but more so, I just think we're trying to learn to deal with a new market that's more volatile than we've had in 6 years. Does that answer your question, Vernon? Type something and let me know if that's okay. Lance, no, I'm not in the home builders anymore. We got called away last month at $51 on DH Horton after getting in at 35, probably spending $3 to $4 on protection. So we netted our 20% return on some better money on DH Horton. I decided to get out of DH Horton because of the higher interest rates and just how some of the mortgage numbers or home sale numbers weren't looking as good as I thought they should. So with that said, no, nothing really stands out to me at this time. Again, if I was looking for an opportunity, a bounce on the SPYs, getting back into more strangle straddles on the SPYs, the Qs, the diamonds, the SPX, the composite if you wanted to. I'm tempted to say Facebook is a buy here, but in all honesty, if Facebook goes under some government regulation or scrutiny, Facebook won't be a killer buy. In fact, it'll be a poor buy. So I don't know. The short answer is I don't know. We will see. But with that said, I don't have any really screaming deals that I would tell you, go find some opportunity to jump into this or jump into that. In fact, Lance, if we could ever get you into the safe option strategies education, you'll find out as I was filling in for Jeffrey this morning that I really couldn't even find a spread trade that to me looked like a great opportunity to put money in, even on a flyer as a spread trade. Most recently, I did do some dollar cost averaging on some leap long calls on Visa. Kind of waiting on Bank of America. I was going to say if you wanted to go stick some 35 January 19 Bank of America long calls on, that might be a straight directional play that's a bit of a gamble. It's a speculative play, but could net you some really nice returns going into this earnings. All right. Are there any other questions you guys have? If not, I'm going to thank you for being here tonight. It's just a short period of time. Vernon and Dave, I appreciate any emails you gave out to Jeffrey for being able to fill in for him while he's on his vacation. It's always fun for me to do a little bit of teaching occasionally. I don't know if I'm one that has the attitude or the aptitude to do teaching on a regular weekly basis, but it is fun for me to be there so often. You guys have a wonderful evening. I do appreciate your time here with me tonight. Look forward to seeing you next week. Have a great evening, and I'll talk to you then. Bye-bye.